you have been paying your credit card bill all wrong, and I wish I knew this sooner, because it would have saved me years of struggling with my credit score. In this video, I'm going to share the tricks and tips I wish I knew earlier about paying credit card bill, including the exact date of when to make the payment. And yes, this video is all about the closing statement date. It's going to be divided in two different parts. First, we are going to talk about what's the closing statement date and why is it important to consider that specific date when to pay your credit card bill. And second, we are going to talk about the exact date of when to make your payment in order to potentially increase your credit score over time. So stick with me, because I'm going to add the best hack at the end of this video. Let's get into it. Let me explain first what is the closing statement date. The closing statement date is that date where your bank report your credit utilization, in other words, your total credit card balance, to the credit bureau in order for them to include that in the calculation of your credit score. If your credit utilization is low, your credit score can be impacted positively. If your credit utilization is high, your credit score can be impacted negatively. We cannot talk about closing statement date without mentioning these two important factors. First, payment history, and second, credit utilization. Let's have an overview and a picture why those two. When you look at the picture of your overall credit score calculation, it includes these 5 factors, as you can see here. Payment history is 35% of your overall credit score calculation. The second important factor is your credit utilization, which is 30% of your overall credit score calculation. After your credit utilization, we have your credit age 15%, your credit mix 10%, and inquiries, which is 10%. Now, out of these 5 factors, your payment history 35% combined with your credit utilization 30%, which is 65% of your overall credit score calculation. First, you want to make sure you never miss the payment. Always want to pay on time. And second, you want to keep your credit utilization low. If you have those two under control, you will see a huge increase to your credit score. But if you do not pay on time at the right date and you neglect your credit utilization, you will see a drastic drop on your credit score, which takes us to step number 2. When exactly is the best day to make the payment on your credit card? Alright, this is what you came for. The answer is pay 5 to 7 days before the closing statement date. Allow the payment to clear out and go by for about 1 to 24 hours for you to use the credit card once again. The reason why is because it lowers your reported balance on your credit card before the credit bureau gets to see it. By paying before the closing statement date, first, you respect the rule number 1, which is on-time payment history. And second, you literally control how much you get to use on your credit card during the month and how much you want to report to the credit bureau. Let's take a quick example. So let's say you have a 1,000 credit card limit. You use it all, you max it out during the month. 5 to 7 days before the closing statement date, you come around and pay out of the $1,900. So you have $100 credit card balance left. On the closing statement date, the $100 balance, which is 10% credit utilization, the 10% credit utilization will be reported to the credit bureaus. And that's what they will use to calculate your credit score. As I explained on the beginning, the higher your credit utilization, the higher your score decrease when The lower your credit utilization, the higher your score increase. Literally, whatever you have left on the credit card will determine how up your score will go or how down your score. Now, and the easiest way to get your closing statement date and your due date is by checking on your credit statement. On your credit card statement, you will see those two dates. If you are confused, another thing you can do is to call your creditors. Whatever bank you are using, call them and ask them, what's my due date on this card and what's my closing statement date on this card. They'll be more than happy to disclose those information for you. So the quick hack I decided to keep for the end is the due date. You got to understand that by paying before the closing statement date, you control your credit utilization and you make the payment once a month. That is already fine. But now, if you want to pay on time, control your credit utilization, and save money on interest rates, another way to pay will be to pay twice a month. 5 to 7 days before the closing statement date. That time frame, 5 to 7 days, is just to allow the payment to go through and clear out. When you do that, let's take back the $1,000 credit card example. On the $1,000 credit card, I maxed out during the month. I pay $900 5 to 7 days before the closing statement date, and I literally wait 24 to 48 hours before the due date and pay off my balance. What it does is that if you pay first of all the $900 before the closing statement date, you have control already your credit utilization. Your credit utilization will report 10% or lower, which will be a positive impact on your credit score. Now you have $100 left. You know, if you carry that balance for the next cycle, you end up paying interest rate on that amount. One thing you can do to avoid paying interest rate and save yourself some money is to pay that $100 24 to 48 business days before the due date. By doing this, you not only control your credit utilization, you pay on time, and you save money on interest rate. All those three combined allow your credit score to grow on a monthly basis consistently. Let's recap. First, you never want to wait till the due date to make a payment. Second, you always want to keep your credit utilization low at 10% or lower. Third, you never want to pay late even by 1 day. Never. And lastly, you always want to pay 5 to 7 business days before the closing statement date to control your credit utilization. Make at least one payment a month, like pay on time, in order to watch your credit score go up. Now, I want to hear from you. Drop a comment down below. Have you been paying your credit card bills the right day? Let me know. And don't forget to like and subscribe. Turn on notification because I drop most no credit hack every single week.